Hello and welcome everyone to Gold Asset of the Day for the 10th of February, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, we have seen that slingshot move higher on the metals, particularly gold, that we discussed with you on the week ahead commodity reports. In fact, just today on Tuesday, we have banked 800 points on gold. For every one lot that you would trade, that will be $8,000 profit. For every 10 lots that you would trade, that will be $80,000 of profit. So it's been a great start to the week, but as always, you do need to stay very nimble in these market conditions. Make sure you're regularly banking profits, locking in those gains, taking them off the table, and then this gives you the flexibility to keep coming in and out of the markets. As we know, bull markets, they don't move up in a straight line, they tend to zigzag. Great example of that recently has been both silver and platinum. In fact, platinum prices today broke out to 4-year highs. Silver prices, as you know, last week they broke out to the highest levels in 8 years. In fact, the biggest one-day move since 2013. Subsequently, we saw the pullback back down to $26 per ounce. We actually identified that with you in detail on the week ahead report as well, how it's such a magnetic level for silver. It's been getting a bit off that level all the way back since 2011, and this week has been no different, with silver breaking out to the upside, breaking out to $27.50 per ounce. Now, as we continue to progress throughout this week, we're awaiting further developments to the actual timing of the stimulus to go through. However, the NFP data that came in on Friday highlighted the need again for stimulus to come in from the Joe Biden administration. And with that, they are making further efforts to push that through. And of course, you're seeing 3 consecutive days of gains on silver, of gold, of platinum, of palladium, and also, in fact, the energies as well breaking out to 13-month highs today. So it's absolutely a trader's market right now. You do want to make sure that you're capitalizing on that. Now, later on in the week, we also transition into the Chinese New Year. That is a week-long public holiday for China, and as a result, markets tend to be very quiet during that Asia-Pacific session, but there are some very specific cycles. The gold market in particular tends to follow during this period towards the end of this week and then into the following week that you can capitalize on. Alongside that, we also have a bank holiday in the US next Monday as well. So with thinner liquidity on the Monday over Asia Pacific and during the US session, this can actually create some really big exaggerated moves. I would look out for that on Monday, the 15th of February. It can be a catalyst. Thin liquidity can cause big exaggerated moves. I'll give you an example. The last time that we had really thin market conditions was around Thanksgiving and Black Friday, and that's where gold prices broke down from 1,800 down to 1,764 US dollars per ounce. That was the lowest level they've broken down to in 6 months, and that was on a US public holiday. So just bear that in mind. That's going to be next week on the Monday. Other major news items that we've had over the last few days, of course, have been the Bank of England now preparing lenders in the UK to go to negative interest rates. So retail banks are now preparing to charge customers to hold their capital in savings accounts. So more than ever, it really is a necessity to learn to trade the markets. It's no longer a nice to have. You want to make sure you're capitalizing on the volatility right now and these trading market conditions. Right now, we're moving into a super cycle with commodities. You can see that from the breakouts that we've seen recently on the precious metals, the base metals, the energy markets. And it's a time that you want to maximize, where you want to be trading the same way that the hedge funds, the banks, the institutions are. You absolutely want to avoid gimmicky indicators or outdated technical analysis where traders keep getting trapped buying in at the highs, they FOMO in, or they panic sell and liquidate at the lows. A great example would be gold on Friday. Broke down to 1,784 US dollars per ounce. Many traders panic sold out, sentiment got really negative, a lot of traders got liquidated, and then we've rallied over 650 points from those lows in just 3 days. So if you know what you're doing, you know the key areas of liquidities, how to gain an edge in the market, you want to be utilizing a research-driven approach. And that, of course, is where you're going to be utilizing market intelligence, data, research, understanding the daily, the weekly, the monthly cycles in the market, marry that up with the intermarket correlations, the ratios, sentiment in the market, very important so that you avoid panic selling at the lows or FOMOing in right at the highs. Marry that up also with macroeconomics, capital flows, and understand understanding key liquidity zones to not only take your trades but also bank profits at the most optimal levels. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join the Gold and Silver Club.